As the markets hit a new all-time high today, are we really as strong as we think? Or could the next couple of days prove to be a challenge for stocks? Here in this video, I will talk about just that, what you need to know for tomorrow, what happened today in our markets, and what Wall Street is thinking about in regards to Nvidia. Is Nvidia going to beat? Is it going to miss? Is it going to give you a really big guide up again on guidance? What's going to happen coming Wednesday and after hours? That's why we will start this video with what Dan Niles just said about Nvidia earnings. Worth mentioning, Tom Lee wrote this post on X and said, while investors are understandably nervous about Nvidia earnings this week, as well as Microsoft AI events, investors have been skeptical of the rally since April 19th, evidenced by growing cash on the sidelines. Tom Lee says this could be pulled into the market, specifically the IWM, small cap, lower quadrant area of our markets. Tom Lee specifically said this: if Nvidia beats expectations, I think it's going to pull money off the sidelines, says Fundstrat's Tom Lee ahead of the chipmaker's earnings next week. I think, again, it probably helps propel a broadening of this market rally. Now that is if Nvidia actually beats and gives you a guide up, which is what most people are expecting right now. And Nvidia was up almost 3% today, and it looks like people are getting a little bit more optimistic heading into those earnings. But here's what Dan Niles just said about Nvidia earnings.
For the year to date, recovering ground from that April pullback. But the biggest test, of course, might come Wednesday when Nvidia reports Q1 results. Stock bouncing off a slew of price target increases today. Here to give us his read on the tech trade is Niles Investment Management founder and portfolio manager Dan Niles. Dan, great to have you. Interesting, provocative thoughts about Nvidia on X this morning. You do think huge beat and raise, but maybe the pricing adjustment is more muted?
Yeah, I think you've got two things obviously balancing out. The stock's up over 90% year to date, obviously up over 500% since the end of 2022. And everybody on the planet knows there's a huge beat and raise coming. And so I think that's the negative in the sense that expectations are sky high. The positive is, believe it or not, the stock is trading 15% below its 5-year average on a PE basis. And so that's why my thoughts are you get a slight move up in the stock when they report, because it is actually historically cheap on a price to earnings basis.
The other thing you point out longer term is you wouldn't be surprised to see multiple drawdowns of 25, 35% over the coming years. What does that say about its tenure as sort of the king of this market?
Well, I think if you go back, one of the things I try to focus on is, do we have an analogy for this period of AI infrastructure build? And of course we do. It's called the internet build-out that happened in the mid-90s. And if you go back and you look at the king of the internet build-out, if you want, Cisco, which became the most valuable company in the world in 2000 for a period of time, that stock had multiple drawdowns of 25 to 35%. It was down 26% in late 95. Down 38% in 97, and down 34% in 1998. The stock went up 4,000%, though, from the end of 94 till its ultimate peak in 2000. And so with Nvidia, you should expect to see the same kind of thing, because I think anybody who's really familiar with semiconductors completely realizes there's been double and triple ordering this whole time. And so the question becomes, when do you go through a period of a digestion before you start the next buildup? And because you've seen lead times come down from a year, which means you order a chip today, you can only get it a year from now. That's now gone down to 3 months. At a certain point, and I think this happens after their latest generation chip called Blackwell comes out, once customers get that chip, then they can go ahead and figure out, okay, we double and triple ordered, how much do we need? I think that digestion phase comes in the early part of next year before we start the next build again, because we're still really early in the AI build. It's only been, a little over a year since we heard about this thing called ChatGPT and OpenAI.
And then what? You think the party comes to an end for Nvidia stock?
No, I think the revenues will go up 3 to 4x from current levels over the next 3 to 4 years. And I think the stock goes with it because, you go back and you look at Cisco and the internet build out. A lot of the companies that were driving that were unprofitable companies that were raising debt to be able to fund that build out. You look at today for the AI build out, well, who's really driving that? It's the most profitable companies on the planet. It's Microsoft, it's Google, it's Meta, and they're driving this. So the odds of this continuing to proliferate over the next 3-4 years is high. I'm just saying that with the lead times having come in, don't think that this is a straight stair step up, because it wasn't for the internet either.
So to point out the obvious here, Nvidia is expected to do very well. So it has to do even better than that. And that is not exactly setting you up in a good way, as the stock is rallying into earnings. Now, if we see a sell-off coming tomorrow, if we see a sell-off the day of earnings before, so preferably if you are a bull and you want to see markets do well here, you actually do want to see a little bit of a pullback before Nvidia earnings. And historically, Nvidia does either sell off before earnings or after earnings. You go through a little bit of consolidation, call it a 10% pullback or so, before earnings or after earnings. Now, what Dan Niles said about the inventory correction essentially is what he's talking about with Nvidia that could start in the beginning of 2025. Now, that's interesting because the markets are forward looking. So if the markets start to think, hey, we're going to have some problems coming in 2025, at least in the short term, that could be problematic for Nvidia now if the markets start to price that in ahead of time. And I mean, you're obviously not going to price in all of what could come ahead of time, but to price in maybe not the strongest growth, maybe a period of, slowing growth for Nvidia in 2025, that would be bad news for the stock that's currently $950 per share or so. Again, this could just lead to a broadening out of our markets. If Nvidia does kind of go on the back burner, there's a lot of capital that if it leaves Nvidia or comes off the sidelines, could go into other areas of the markets as long as the economy continues to remain resilient. I don't know if we can say strong at this point, but resilient to recession risks. We do have Palo Alto that is trading down about 8% in after hours after slightly missing on their guidance EPS for next quarter. And after, last earnings, Palo Alto sold off a lot, 28.5% the next day, actually turned $40 into $4,000 on that trade. You ended up falling even more. Pelosi started buying in the 260s, ran the stock up all the way to $323 before earnings. So there were some high expectations again for Palo Alto, despite the previous quarter's massive sell-off. So 8% down is having a somewhat negative impact on the broader markets as well. It also doesn't help that today 10-year treasury yields were up about 3 basis points. And that also works to put downside pressure on stocks. That's why some areas of the markets were doing well today, some areas were not doing as well. And we do have earnings tomorrow morning as well with Macy's, Lowe's, and AutoZone. Those are going to be your 3 larger ones, specifically Macy's, Lowe's. We want to see how the consumer is doing. We might get a little bit more clarity there, even though Macy's is not seen as, your go-to destination for a lot of things. It could be important to see what Macy's says about the consumer. And then you have Toll Brothers Tuesday and after hours. That can be important for housing. If Toll Brothers has bad earnings, that's going to be a positive for markets at this point. Wednesday pre-market, you have Target. Target announced today that they are lowering prices on 5,000 general goods throughout their stores, which is most products, especially a lot of food products. They announced that they will be lowering prices to try to get people into the doors. That's kind of a sign that Target earnings might not be that great, but we'll have to see. Maybe the consumer's not doing as good as a lot of us think. And then obviously Wednesday you have Nvidia, Snowflake, and Elf. And then Thursday you have Ralph Lauren in the morning, TD Bank in the morning, and Polestar in the morning. And then in after hours you have Decker Brands. They make like UGG boots and different products along those lines. Intuit, Ross, and Workday that report Thursday and after hours. Federal Reserve Bank of Atlanta President Raphael Bostic said the new steady state of interest rates is likely to be higher than what people have known over the last decade, maybe back to where we were in the 1990s and the 2000s. Fed Mester, though, was really the one that was hawking away at markets today. She said there's no risk in spending more time gathering data on inflation because the economy is strong. She also said, I don't think about a potential rate cut in terms of when. And she said risks that were too restrictive have gone down. Monetary policy is moderating demand, but not as fast as I expected. And she also did make a very interesting comment as well. She said, previously, I expected 3 rate cuts this year. I do not think that's still appropriate. She says we can hold rates or even raise them if inflation against expectations stalls out or reverses. And then she says right after, if there is unforeseen deterioration on the real side of the economy, we can cut rates. So my general consensus is the Fed doesn't know what they're going to do. They don't know what's going to happen, and they're just waiting to see if the economy gets weaker, if it stays on the strong side, if inflation goes up or down. The Fed just doesn't know what they're doing right now. And odds are there will be a policy mistake at some point down the line, whether it's later this year or in 2025. As the economy has already started to weaken, it seems obvious the Fed is going to be too late cutting rates. But then again, that's just my opinion, and that is not a guarantee. Coming tomorrow, we will get inflation numbers out of Canada at 8:30 in the morning. At 9 o'clock in the morning, we will hear from Fed Barkin, Fed Waller, Fed Williams, and Fed Bostic. And then around noon, we will get a speech from Fed Barr. Fed Bostic speaks at 7 p.m. tomorrow. Fed Collins and Fed Mester also all speak at 7 p.m. tomorrow. So a ton of Fed speakers, and judging off of today, they're a little bit more on the, we need to wait and see what inflation does. Maybe we need to raise rates again. They're sounding concerned about inflation. At the same time, they're not paying attention to what's going on in the economy. And that's a problem for markets. But in the near term, it's all about Nvidia, and if Nvidia does well or meets expectations, I do think the rest of the markets could benefit a lot more from that than Nvidia could actually benefit itself. Now, if Nvidia misses for whatever reason, that would really catch the markets by surprise, and that would be bad news for everything. On that note, the Fear and Greed Index today is at 64. This is from CNN. Market momentum is greed. Stock price strength is fear. Stock price breadth is greed. Put and call options is extreme greed. Market volatility is neutral. Safe haven demand, extreme greed. And junk bond demand is neutral as well. And check this out. For June 12th, the markets have a 98% chance of no move from the Fed. There's actually a 2% chance now that the Fed could raise rates. On Friday, there was a 9% chance the Fed would cut rates June 12th. And that totally flip-flopped to a 2% chance of raising rates and a 0% chance of a cut coming in June. And this obviously does not help to quell any concerns that you may have that stocks are too expensive. JP Morgan's Jamie Dimon, longtime CEO, says JP Morgan's stock is too expensive. He says we're not going to buy back a lot of shares or stock at these prices. Ouch. I think that just says something for everything out on the markets. Any stock that's done exceptionally well, it's expensive. But let me know what you think about all of this information down below in the comment section. Today was a bit of an unexpected warning about Nvidia and what the inventory situation could look like and the overall ordering for Nvidia chips later this year into 2025. I was actually kind of surprised to hear someone of mainstream that goes on CNBC that was actually saying that. Most people are afraid to talk negative about Nvidia because, after all, you almost have to own the stock or you're going to lose your clients because people want to own Nvidia. So let me know what you think about this down below in the comment section. Do you think Nvidia sells off over the next 2 days? Do you think Nvidia sells off after earnings? Do you think Nvidia doesn't sell off at all? In fact, every earnings we have had with Nvidia ever since May of 2023, when this whole AI revolution started, you have always seen a pre-earnings sell-off or post-earnings sell-off. After, you know, maybe you go up a little bit after earnings, those next couple of weeks tend to actually give you a bit of a pullback. So let me know what you think down below in the comment section. Do you think the markets are going to broaden out here? I really would love your take down there. Hit the like button and subscribe to the channel if you made it to the end of this video. You guys have a fantastic rest of your day, and I will see you in the next one.